And that takes us to the good, the bad, and the ugly today. Joining me now, Jim Frischling is back with me here in the studio. Phil Flynn is in the pits of the CME. Adam Shapiro standing by up in the newsroom. And Jim, to you first with your good call on banks. Real quick, do you care about this breaking news at all?
I do, and I feel like I got set up because that's certainly not. It's okay.
Wasn't on purpose.
It's all good. That's actually one of the biggest risks facing some of the largest banks, particularly the ones that were heavily involved with the mortgage space. I think the litigation risks facing these institutions is contributing a great deal to the gridlock, and the courts are loaded and there's a backlog, and really this is having a very damaging effect on the housing market, in my opinion, and also it has to work its way through the system. So that is one of the biggest risks facing these institutions.
Bank of America is the biggest holder of mortgages in the country. The stock it's been cut in half in the last year.
It's been cut in half,
okay.
But it's still on a very good run. And my reason for liking the banks, and actually I want to distinguish between banks acting as banks and banks acting as securities firms, because the investment banking business, the capital markets business, somewhat under a great deal of pressure, being right-sized, while the banks that are focusing on lending, like a Wells Fargo, for example, which shined, I think is doing incredibly well. So my four-pillar system, that's Wells, that's B of A, that's Citi and JP, I think the more they focus on the lending books, the better off they're going to be.
And I do want to let our viewers know that, yes, all the stocks have been down year over year, but you picked these in December, and the performances have been very strong since December on the banks, and financials have been doing very well in January. So props to you.
I appreciate it.
I always like, people do good stuff, I always say it. All right, Phil, you've got our bad today. I'm curious if Congress is going to extend these tax breaks for the wind power industry, because that can be really kind of ugly for the industry if they don't.
It can be, but I also think it's bad that the industry is really using a valid threat against the government, saying, hey, guys, if you don't give us this tax credit, we're going to stop building plants. We're going to stop building wind farms. In other words, we're looking to the government for another handout to make an inefficient fuel competitive, and if we don't get it from the government, we're going to be there. So right now, this is going to get very ugly, and there's a lot of people on both sides of this issue right now with these wind farms. But essentially, what we're finding is that with the low price of natural gas and other alternative fuels, do these wind farms actually make sense? We have been spending a lot of money, almost 2.5 cents per kilowatt hour, which I probably spent on my air conditioner or my heater, and essentially, is it really worth it? After all this money and commitment to wind, it only generates about 3% of the U.S. electricity use, when we've got other fuels like natural gas that are hitting multi-decades low. Maybe we shouldn't do this. I think it's bad.
Bad, and the not in my backyard thing, which has been consistently coming out of, well, the Kennedys, for instance. All right, Adam,
we'll for the birds.
Yeah, all right, so I think a whole 5 minutes has gone by without talking about the Super Bowl. Adam, you've got the ugly side of the Super Bowl. What is it?
That's right. It has to do with the fraudulent and fake merchandise that people can buy, fake Patriot jerseys and caps or Giant jerseys and caps. U.S. government took an interest in this. Way back in October, they launched this operation, which they called Fake Sweep. I think they need to get new people in the U.S. government to come up with more creative names for these operations, like we're going to bust you bad if you do this. Anyway, they seized something like $5 million worth of fake Giants and Patriot jerseys, all the kind of memorabilia that people buy, and they shut down, Cheryl, 307 different websites. Now, most of these were selling the fraudulent materials, and not just NFL memorabilia, but also NHL stuff, Major League Baseball stuff. They've been shut down, but so have 12 sites that used to stream sporting events, so you didn't have to watch it on TV. So you better call Time Warner or Comcast and get your cable hooked back up, or Vios, whatever you use. But this was all done through Immigration and Customs Enforcement and Department of Homeland Security. And if you're wondering, what is the Department of Homeland Security? Their mission's terrorism, cracking down on sports fraud. ICE, Immigration Customs Enforcement, is part of Homeland Security, so that's why it was a joint operation.
Okay, but back to the fake stuff, because, look, who doesn't go down to Chinatown to get a fake purse? I mean, not me, of course, but some people do it. Jim, would you buy fake stuff if it said Giants on it? Would you do it?
I guess I'm happy to say all my gear is official gear, and it is a lot of Giant gear. But if I'm walking past into a stadium or on a concert and it's an at-whim purchase, I kind of admit I recognize it's probably not officially licensed merchandise. So I hear that might happen sometime.
Phil, hypothetically, Phil, what do you think?
Well, I should have known something was wrong when it said Boston Patriots and my New York jersey said Peyton Manning. So I don't know. Something was wrong. I didn't know, but it might have been real. Who Who knows?
Adam, I mean, New York is like, I'm sorry, but, you know, this is the capital of, you know, knockoffs, so.
Well, it is the capital of knockoffs, but, you know, most times people would say, look, it doesn't matter if it's official or licensed or not, it's all made in China, right? Not true. Some of this stuff is made in the United States.
Oh, look,
so if you're about to go
story.
buy a knockoff, at least with the sports stuff, be careful.
It's a job story. Guys, thank you very much. Well, speaking of jobs, jobs may be picking up, depending on how you look at the report for January, but so is the backlash right now against corporate bonuses, especially in the financial sector. Jim Frischling is back with me on the set. You say without true, strong compensation, market-level compensation, Jim, that companies cannot recover. Taxpayers basically are never going to get any of their investments back in any of the banks.
Well, again, I completely understand the frustration on the following topic, but right now we're in anti-bonus bashing season again, and whether it's the U.S. Senate putting forward a plan to curtail millions of bonuses to executives at the GSEs, Fannie and Freddie, or whether it's even the CEO of RBS forfeiting its own bonus, the fact is the amount of bonus dollars we're talking about relative to the amount of taxpayer dollars at risk, it's night and day. The real issue should be how to get the taxpayer their money back, how to make these institutions viable, competitive, and when it comes down to there is what does it take to have the right people in the right seats, again, allowing these institutions to get back on track.
But Jim, the bonus structure of Wall Street is completely changing. I mean, I'm sorry, but this is a bad year for bonuses on Wall Street. I mean, not that anybody in America really cares. They have no sympathy for Wall Street traders. But at the same time, you're saying that this is going to have a negative effect on companies that we've bailed out, including Freddie Mac, Fannie Mae. I've actually posed that argument before, and I've been pretty beaten up on it.
And again, I'm for saying what I'm about to say, I think I'm going to join you and I'll get beaten up too. But the fact is, these companies today, the people that are in those seats today, if they're doing a good job today, then they need that market level compensation. And all I'm looking for is market level. The fact is, there is a repricing going on Wall Street, and you can't think month to month, quarter to quarter, year to year. Employees are going to have to think longer term. But the fact is, these agencies that we're talking about, they need to function for us to get our money back.
Even with, though, a story that broke this week, in particular, Freddie Mac, the fact that they actually have a trading arm, which a lot of people didn't even know. They have a trading arm that was actually trading and betting against homeowners, which that's a whole other side of the story here, but that's what makes Americans so angry.
And again, there is such a fairness issue here that a small business, you fail, you're done, you lose your money. And I think a lot of people don't understand how come it's heads I win, tails you lose. But the fact remains is if you think about the Los Angeles Dodgers going to the bankruptcy and the Major League Baseball taking them over, you know what? You still got to get that team competitive because there's value in that. And that's what I'm saying about the GSEs. We need to make sure the right people are in the seats to get us through this period. And again, focusing on bonuses is just the wrong focus. It's an issue, but it's just the wrong one.
Still a lot of jobs for hedge funds in Connecticut. You know, that's where they're going to end up going. Jim, thank you very much. It is time now for the pick. Jim Frischling is back. And before we get to your latest names, I got to give you again, kudos for some of the earlier picks you've made. You picked Deere up 7% since January 1st. You liked Deere before. You still like it?
I do, and it's getting a little more expensive, obviously, but I do like it. We like the dominant players in their space, in their industry, and that's Deere, 50% U.S. market share. And the opportunity for Deere still remains the emerging economies. And again, the theme we like there is the agriculture business plus construction and emerging economies looking to Western farmers essentially to imitate some of the things, buy tractors, and get into this. So we think there's a lot of growth there, particularly as a result of India, Brazil, and China. So again, getting more expensive, but still like it.
I want to get to some of the other stocks that you've talked to me about before and brought back on the show, and you liked. I remember you said you called it mobility, your mobility play, and it was Apple and it was Qualcomm. I was looking at the stats on Qualcomm, and it did gain 10% year over year. So
it did, and this sector is we still are enthusiastic about it. We're still endorsing and overweighting the mobility sector from a standpoint of the companies that allow things to be at our fingertips and meeting the demand for smartphone growth, 3G and 4G technology adoption. Even the Facebook IPO announcement, you look and you realize how many of its subscribers, about half, are accessing Facebook through its mobile phone. So the need for this technology to really connect. So yes, it's getting to be a much pricier sector, but the fact is the demand is still growing, and that's why we still like it.
All right, up 11% year to date. All right, let's talk about something you don't like. I've gone through the picks and things that you have liked, but what do you not like right now? Is there maybe a sector that you don't like right now?
Yeah, and this is more of a macro trend, but it's really right now it's healthcare stocks. And And part of it is it seems to be nobody, whether it's Republicans or Democrats. It seems both sides of the aisle are beating on these folks in terms of the high price of health care. Even Chairman Bernanke talked about how the health care cost rising is maybe putting, in addition to other things, is curtailing maybe private investment. So I just don't see a silver lining to this story right now. So with so many other things going on, while it's a very beaten up sector, we're going to cool it on that.
Well, it's certainly a contrarian view. I mean, I can't tell you how many guests I've had on the show that say you've got to make a play for healthcare. Healthcare is a good thing. Even though there's a spider, and up today, but you know, volatile.
Again, I just the underweight has more to do with just the headwinds it's facing and the pressure that it's under from so many factors and just other things that we prefer to be looking at right now.
All right. Jim Frischling, co-founder and president of NewOak Capital. Thanks for being here, Jim.
Thank you so much.
All right. I'm listening. I'm listening to your picks.